Welcome back. Aankur Patni, who's the Executive Director at Iron Exchange, joins us now to discuss an outlook on their business. Now, Iron Exchange is a company that is into water and wastewater treatment and environment solutions. In Q1, on a quarter-on-quarter basis, there was a big dip actually in their earnings. The revenues were down about 23% compared to the preceding quarter, and EBITDA was also down about 65%. Let's find out. Aankur, thanks a lot for joining in. I wanted to ask you about your order book. I think you have about 8,000 crores as far as your order bid pipeline goes. What is the split between international and domestic, and what is the outlook for FY23?
Good afternoon. You mentioned about the dip in the overall numbers compared to the March quarter. Typically, the March quarter is the biggest quarter that we have, and it's a scenario which you'll see repeated year after year. The first quarter is one of the smallest quarters, and thereafter, as we go through the year, the numbers keep rising. That's just to provide a perspective of how the numbers move for the company. The bid pipeline is extremely strong at the moment, and so is the order book. Our current order books are at their highest levels ever, currently standing just shy of 3,000 crores. Out of this, roughly around 20% would be in exports, and the rest would be domestic.
Aankur, can you give us a sense of what's the amount that is pending from projects that you had undertaken in Sri Lanka? How long before you write them off completely, or is there any hope of you recovering them?
No, we don't have any significant credit risk there. The amount which we receive on account of the Sri Lanka contract comes from Exim Bank, and we have greatly slowed down the pace of execution in consultation with Exim Bank, and as such, the receivables there are not a matter of concern.
Okay. Similarly, Aankur, you get around 30% of your business from exports. You've addressed Sri Lanka. The other point of concern has definitely been Europe, especially with the gas supply situation currently. Has that impacted business at all for you?
The exports have certainly got impacted a little bit. We are seeing a small stress there. The logistic issues, as well as not just the cost of the logistics, but also container availability, that was affecting our performance in the export markets. At least the logistic issues seem to be now becoming better, and we are looking at relatively improved position as far as the export market is concerned. I am quite hopeful by the end of the year we will report good numbers on export front.
Can you tell us what those numbers could be on an average? What are you looking at in terms of growth for exports?
As of date, we are looking at a strain. I think we will be at par by the end of the first half, showing slight improvement in consumables, but a good improvement coming in on engineering front, which would result probably in a slight growth as we end the first half of the year. By the end of the second half, we should be depositing a good growth.
Gained some traction in the consumer segment, where you have achieved break-even out here. What's the revenue potential for this segment in FY23 and chemicals as well? You were waiting for an environmental clearance for a plant of yours. When does that come? And what does it mean in FY23 for your chemical segment? So your consumer segment and your chemical segment, can you provide us with some outlook there?
Consumer segment is showing very good growth numbers. As we speak, we are expecting growth from this segment upward of 50-60% for the year. As far as the chemical segment is concerned, there also the growth numbers are looking interesting. We should be, by the end of the year, we should be looking at roughly around a 30% growth there.
Okay, just on that chemicals segment, you get around, I think, 35% of your business from that particular segment. You have indicated that it was tough to pass on the price increases. So tell us what the situation is currently. How much have you managed to pass on? How much do you need to pass on? And what is the impact on margins that we can expect?
It takes a little bit time for the price impacts to be passed on to the customers, and we had seen, a period where the prices were just going up continuously, and each price revision, had to be followed by another one. The situation has stabilized a little bit over the past few weeks, and we are seeing now that the margins are coming back towards what we expect to be normal. Going forward, we expect the margins to continue improving to the end of the year, and we should be able to report overall numbers as far as percentage margins are concerned, which would be better than what we reported last year end.
Sorry, how does that work? I mean, what would you're looking at double-digit margins or better than that? If you can give us some numbers.
Yes, we are looking at so the chemical division, the chemical segment gives us gives us a very good margin overall, and the improvement which we will see by the end of the year would be getting us a little bit more towards the FY21 number, where we reported roughly around 24.5% and thereabouts. So we should be improving from the FY22 number of somewhere around 21.5 and moving towards the FY 2021 number of roughly around 23.5 thereabouts.
At 200 basis points margin improvement, what would be the revenue growth? That's point number one. And secondly, finally, before we let you go, you've also filed for a patent, a mineralizer media for producing alkaline water and hydrogen water, for which you are expected to hear by, I presume, October, November sometime from the patent office. If you are given that patent, how big could things be for you in this business that you're looking for?
We are, looking at, I'm answering the first question, we are looking at roughly around 30% growth as far as the chemical business is concerned. And that's the margin numbers which I spoke about. For the overall company, we should be looking at roughly around a 40% growth, probably more than that, but we'll get better visibility after the first half is over, and I should be able to come back to you with slightly more aggressive projections. But as of today, it looks like 40%. The patent which you spoke about is to do with the consumer segment. We are already seeing very good traction for the relevant product here. We expect this to add significantly to the growth of the consumer segment.
Okay, an overall 40% revenue growth in FY23 and a 200 basis points margin expansion. That is some aggressive target. All the best for the business. Thanks a lot for joining in and have a great day. Well, that's Ion Exchange with their view on the overall business. Let's slip into a short break.